Major store shutdowns 2024, the retail apocalypse explained. Bed Bath & Beyond announced over the weekend that it was going bankrupt and that its 480 surviving stores would stay open while it sold off its inventory. However, this news was the last straw for the firm, which was previously the industry leader in home goods sales in the United States. Following months of alarming financial news, which resulted in the closure of 236 outlets in February, the statement was made. Since then, despite over $5.2 billion in unmanageable debt, Bed Bath & Beyond has battled to keep its 120 buybuy BABY locations and 360 named brand storefronts open. The closing of Bed Bath & Beyond is just the most recent example of the large chain stores that have been shuttering their doors at an increasing rate since the pandemic. Internet retailers such as Amazon have also strengthened their market share, a worrying trend for traditional brick-and-mortar retailers that has been dubbed the retail apocalypse. Thousands more store closures are anticipated in the upcoming years, adding to the approximately 5,000 storefront closures countrywide since 2021 at key brands including Target, Best Buy, Sears, Foot Locker, and CVS. The investment firm UBS issued a warning earlier this year stating that 50,000 stores would close by 2027 and that a combination of a slowdown in consumer spending, a fall in the availability of credit, and an increase in the penetration of e-commerce would cause the pace of store closures to accelerate. These are a few of the most well-known retailers that starting in 2021 have started to close several of their shops in 2024. Number 12. Bed Bath & Beyond. The retail behemoth, which was founded in 1971, formerly possessed over 1,500 locations nationwide. However, the company's storefront-forward business model had been severely damaged by supply chain problems brought on by the epidemic, and the company's earnings had been destroyed by the rise of e-commerce in recent years. In July 2020, Bed Bath & Beyond first declared its intention to close 200 of its locations. As sales continued to decline, more closures were planned. Gustavo Arnold, the business's chief financial officer, then committed suicide in New York City in September 2022 after it was revealed that he had manipulated the stock price of the company through a pump-and-dump strategy to sell off his shares at a higher price. It almost forced Bed Bath & Beyond into bankruptcy at the same time that the business was being severely damaged by the year's debilitating inflation. Finally calling it quits on April 23, the store filed for bankruptcy after struggling through the new year. The corporation reported that its estimated assets and liabilities were between $1 billion and $10 billion in its most recent filings. Number 2. Foot Locker. Foot Locker revealed last week that it intended to close more than 400 of its poorly performing mall locations by the year 2026. There are currently 1,300 retail sites for the sportswear and footwear stores in U.S. malls. Despite an overall rising trend in the stock market, Foot Locker shares were down more than 5% for the day when the statement was made. According to the corporation, the closings will enable it to launch new shop designs and increase its yearly sales by $1 billion. Number 10. Best Buy. The electronics giant declared in March that it will close up to 30 stores by the end of 2023 in addition to the 17 it would close nationwide. It comes after a string of Best Buy store closings that have increased over the last several years. According to Best Life, CEO Corey Suberry stated during a recent earnings call that the company aims to continue to lose an average of 15 to 20 traditional large-format stores per year. Number 9. Rite Aid. The pharmacy chain, which had previously announced plans to liquidate 145 locations in April 2022, stated in December that it may consider closing additional shops in the wake of nearly $67 million in quarterly losses, as reported by Forbes. The firm still operated 24 locations by the end of 2022, but it has not said how many of those could close in the most recent round. Rite Aid announced the closing of 63 stores in 2021 as a result of its struggles to compete with Walgreens and CVS. Number 8. The CVS. Earlier this year, CVS CEO Karen Lynch announced the company's intention to close 900 shops countrywide by the end of 2026, with at least 300 locations closing each of the following 3 years. Nonetheless, Best Life claims that it still has about 9,600 locations across the nation. In the year 2021, Global Data's retail guru Neil Saunders issued a warning. Too many stores are stuck in the past with inadequate lighting, dismal interiors, sloppy merchandising, and a weak assortment of products. Number 7. The Walgreens. Similar to CVS, Walgreens has announced plans to close several of its over 9,000 locations. As a sign of its drive into online retail, it announced in April 2022 that it will launch its first significant drone delivery operation in Dallas-Fort Worth. It closed stores in Alabama, Minnesota, Vermont, and New York this year. Number 6. Walmart. Due to subpar financial performance, the biggest retailer in the U.S. announced in February that it would close 12 locations across 9 states and Washington, D.C. Arkansas, Hawaii, Florida, Illinois, Indiana, Minnesota, New Mexico, Oregon, and Wisconsin are the states that have lost a Walmart. This move is in line with a previous pattern where Walmart has been removing underperforming retail locations every year. In 2022, Doug McMillon, the company's CEO, stated that record-breaking retail theft was a significant contributor to the business's financial success and might result in shop closures. Theft is a problem. That's more than it has ever been, McMillon stated at the time. There will be price increases and slash or store closings. Number 5. Sears. Around the turn of the 20th century, Sears released the Sears Roebuck catalog, which completely changed the way people shopped. Later, the company started to open brick-and-mortar stores around the nation. The company grew to such an extent that for a while, it worked out of the Sears Tower in Chicago, which is the highest structure in the world. For most of the 20th century, the corporation controlled the market, but as big box rivals like Walmart and Target became more well-known due to its inability to keep up, Sears started to lose money to rivals. At last, the business started shutting down all of its stores. Just 12 stores remained as of December 2022, at which point Sears declared it would be shutting down 115 of its subsidiary, Sears Hometown. Number 4. Target. According to Insider, Target is closing 4 stores across 3 metro areas, 2 close to Washington, D.C., 1 in Philadelphia, and 1 in Minneapolis. The company indicated that the closures were primarily due to a decline in foot traffic and that most retail employees would be allowed to work at other sites. The corporation started opening these 4 smaller format stores, each 20,000 square feet or less, roughly 10 years ago to cater to urban consumers. The dates of the closures are May 13 and May. Number 3. Party City. Party City, a retailer of party supplies with headquarters in New Jersey, filed for Chapter 11 bankruptcy in January and declared bankruptcy a month later. The company said it would be closing 22 locations countrywide, with potential closures of additional locations. Before the news, it already closed 28 of its more than 800 locations around the country. Number 2. Gap and Banana Republic. Banana Republic's parent company, Gap Incorporated, declared in October 2020 that it would close over 350 locations nationwide by the end of 2023. Since then, it has been verified that fewer than 300 stores have permanently closed, with 175 being Gap and about 120 being Banana Republic. Thus, it is reasonable to anticipate that the group will close about 50 more this year. We are carefully examining our real estate to support the optimal path forward as we adjust to the current market conditions and meet the rise in online demand. A statement from Gap Incorporated stated, Number 1. The RealReal. According to a filing with the Securities and Exchange Commission in February, the online retailer of secondhand designer clothing had 16 brick-and-mortar locations as of last September. However, in February, the company stated that it would close 4 of those locations in San Francisco, Chicago, Atlanta, and Austin. Additionally, it said that some 230 workers, or 7% of its total workforce, would be let go. Being relatively small, new, and having never turned a profit every quarter sets this retail company apart from many others that are facing widespread closures. So this is the end of our today's video. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.